Hello, my friends. Thank you for joining me for another video. I'm so glad you could be here with me. Recently, I have been talking about trading the 1 minute time frame, and there's two things I want to address in this video today, and I will be showing you past price action. Um, I want to address my entries and how it is that I choose to enter a market, and I know that I mentioned this on a previous video, but I just want to go over that again. But the most important thing I want to talk about today is how I know when I have lost my trading advantage. So what you have before you is the Euro USD on the 1 minute time frame. And when I am choosing an entry, what I'm looking for is um, a situation where all of my moving averages are coming together. Not only that, but this is so important that my moving averages make sense. You'll see how my moving averages are coming together here, and also we're being approached by the 50 period. That's what I'm looking for. But this is a thing that's very, very important to me with my moving averages. My moving averages have to make sense. Here you have your 20, your 15, well, this is the 14, your 10, your 8, and then it's crossed over by the 50. This makes sense. This is a really good trade. Now, how is it? And I'm going to show you some different examples, but I know that I have the advantage when I break below that 50 period when my moving averages are close, and you can see how nicely that bled down. But one of the things that I want to point out while I have this chart up, and I'm going to show you some charts where you don't have the advantage, or I may not have the advantage that I thought I did. But if I get in this trade right here and price begins to move above that previous candle, whether it closes there or not, I know that I don't have the advantage that I thought I did, because once you enter a good trade, price should start bleeding for you almost immediately. So that's how you know you've entered a good trade. Definitely stay out of this. When your moving average is all choppy like this, stay out. Also, if you enter a trade, and this looks like you may have that advantage, there's a 50, 20, 14, 10, 8. Now, just say you entered on this candle. You have a break above below all of the moving averages. Even though they're kind of choppy here, you can see where they're kind of coming together. You think you have an advantage, but if you get in, just say you decide this candle, if you get in on this candle and you're not in a good profit within 7 to 10 minutes, go ahead and close that trade out, because chances are very, very good that price is going to reverse on you. Now, this is another trade that I don't consider a good trade, even though you have this price bar creaming all of the moving averages. My moving averages are wacky. When I look to enter a trade, then I want my moving averages to make sense. I want my 20, 15, or 14, 10, and 8. On some of my charts, this is 15, but my 10 and 8, I want these things to be in some kind of order, either 8, 10, 14, and 20, like that. Once they get crazy like this, where I have my 14, 20, um, 10, 8, and yeah, then I know this doesn't make for a good trade. And you can see that that actually bled down. If you entered in on this candle, which the high was 78, then you only fell down to 71. That's a 7 pip drop. That's not a trade that you want to be in. Okay, this is the kind of trade that you do not want to be in. You see the spread in your moving averages, even though again you have a price bar that's creaming 4 of your moving averages. It looks like it's going to end up being a good trade by the time you enter it. The high is 113.38 and it drops down to 113.27. It's not a trade that you want to get in. But another thing, if you enter a trade and your moving averages seem like, okay, they're going to work out because now you have your 20, your 15, your 10, or your 14, your 10, and your 8. And you get to a point where your moving averages start to get wacky. Get out of that trade. It's not going to make for a good trade for you because you can see you got a situation where you have your 15 by your 50 by your 10, by your 8, and your 20 is above. That's not going to turn out to be a good trade. So watch for the order of your moving averages. I know that it seems to be a little thing, but it's very important in predicting whether or not you're in a good trade. Like I said, if your moving averages look like they're going to work out and they get wacky on you, go ahead and cut with a tiny profit or at break even if you can. Again, not a good trade here at all. Look at those moving averages. And they're all wacky. You have the 15, the 10, the 8, the 20, and the 50. They make no sense. Another thing is coming out of the gate and another thing, oh, yes, I definitely want to mention it. When your 50 period is flat, this is not a time that you want to enter the market. When I decide to take a trade let's just use the downside since this is what's going on right here. I know it's not giving me the biggest advantage if my 15 or my 14 is coming out first, even though eventually my 20 is on top. And this is the way I like to see my moving averages in a down trade, but not quite so far. My 50, 20, 14, 10, and 8. Now that makes sense, but if my 15 is shooting out first, I want this 20 to at least be on top. So then I know that that's not going to make the very best trade for me. The high on this candle is 112.76, and you drop down to um, 112.52. Now, if you wait for the close of that candle, it stops at 112.64. That's not a trade. Now, if you're scalper, that's perfect. We're talking about the trades that's going to give you the most advantage, and that would have worked out for a pretty good trade if you're looking to get about 10 pips. Now, this makes for a very good trade. You got a close above all of the moving averages, but look at the order of the moving average. You have 8, 10, 14, 20, and 50. When you are trending up, that's what you want your moving averages to look like. And you want to be in a decent profit before you get a pullback and price continues on in the path of your moving averages. So that's what you're looking for. If you began to get price closing or price even visiting, it doesn't even have to close. If price starts going below that candle, you do not have the advantage that you thought you did in that trade. Again, crazy price action. Stay out. If your moving average, your 50 period, if it's kind of flat, then all you're going to get is this choppy sideways price action. What you're looking for is a trade that's going to give you the most advantage. If you're a scalper, all of this is fine. But if you're looking to ride a trade for a few minutes, then this is not the market you want to be in. Now this makes for a nice trade even though your moving averages aren't right there together then. You can see where they were previously, and this is my litmus test for whether or not it's a good idea for me to get into a trade. By the time I decide to take a trade below that 50 period, I definitely want these other moving averages in order. If they're not, it's not going to make for the kind of trade that I want. Here, the high is 112.52. The low is 112.01. You're talking about 50 pips. These are the kind of trades that I'm looking for in my 1 minute time frame. Now, this is a 14 period moving average. Let's talk about having just one moving average. If your moving average is flat, this is not a trade that you want to take. Once you get a good close below that moving average, then you see how it turns into a nice trade. And I'll show you this with the moving average on my real platform because I actually saw this trade set up this morning. Now you can see how as long as you're below that moving average, you're in for a pretty good trade. But once you feel like you've gotten a decent profit, go ahead and get out of the market and just wait for your next trade setup, because see, you start to get into that sideways moving average again. It's not going to give you the best advantage unless you're a scalper, because eventually what you'll see is price will begin to move against you. This kind of thing, stay out of it. It's just a joke. It's not worth trading unless you're really good at what you're doing. Now this is where we are in the market currently. I would not trade this. It is 12:51 p.m. Central Time. I see no advantage in this market. Now this is the same chart that I showed you with the 14 period moving average. This is this Euro JPY with all of the moving averages, and I was actually up this morning. I generally get up about 2 a.m. Central Time to look for good trades in the market. Um, I got up this morning, and I'm sorry about the parameters of this video because I'm switching between my real platform and my practice account. It didn't work out as good as I thought. I did not realize that these things were different sizes. I actually saw this trade this morning. I did not get in it simply because it was the euro pound, and I thought, it's not going to yield enough profit. But it was a beautiful trade setup, and you can see how it bled down very nicely. And it actually continued to bleed for some times before you began to get into that kind of sideways action that's not going to yield anything, and it fell again before you began to get a valid reversal. And this is the kind of thing that I'm looking for when I'm looking for a bullish trade. You got the 50, you got the 20, the 15, the 8, and see, I have the 15 on my real chart. I'm just experimenting with these things, and the 8. So this is what I'm looking for when I decide to take a trade in a bullish fashion. You can take trades on the 1 minute time frame all day long, and even with the setup that I trade, you're going to get several trades. However, I'm looking for the trades that's going to yield me the most profit. I'm in this for the most profit that I can get. I hope that this answers any questions that you have on the 1 minute time frame. If there's something that I have not answered for you, please ask me. You know I have no secrets. I'll tell you if I know it. Have a terrific trading week. And yes, you can absolutely do this. You can be successful at Forex.